Welcome, everybody. This is the Wyckoff Analytics live stream. And together with Alessio, we're going to be discussing today some of the concepts from the Wyckoff methodology, answer your questions. We most likely will go through the Bitcoin chart. We know that there is a lot of interest, and Alessio, obviously, our expert on the cryptos. So I'm looking forward to hearing his opinion about what's going on right now, what should we expect, and so on and so forth. But with that, Alessio, welcome.
Glad to be here. Very happy to join the streaming.
All right. Well, Owen gave us a couple of questions, actually three questions. And then, whatever questions come from the audience, we could always pick that up. Just want to tell you guys right away that we have the December 15th free session where we will be talking about the Wyckoff method, the chart reading, what we do as a company. I want you to go to our website and sign up for that. It's completely free. So go for it, and we will have way, way more time, and we'll be more in depth. I will be showing some of my trades. I will be showing some of the concepts that we will be studying in WTC1, WTC2, which had a major revamping this semester. Like I literally put everything upside down and created the new course. So for those of you even who have taken WTC series before, feel free to check out the new curriculum and you will instantly feel the difference. All right, I see that people are arriving. Just keep posting your questions. But we have the first three questions that Owen gave us. Okay, Alessio, question number one. What would be the single most important methodology concept to master for the beginner intermediate trader? What do you think?
While volume analysis, because so many traders are not considering volume in their analysis. So stick with Wyckoff and look at the volume. Look for the signs of institutional participation. That's what we do at Wyckoff Analytics.
Yeah, I would probably just slightly extend on that. You know, uh, Alessio is targeting specifically volume. I would say that volume in the relationship to the price. So this would be even more specific. So I see how that relationship is probably the most important. Everything else comes out of that. And I just want to make this statement: when we chart read, when we go through the chart, and we've uncovered so many concepts, we kind of like see the chart majority of the time for what it is. Sometimes we don't see it. I mean, like, I don't think that a lot of people in the world can see the chart for what it is, continuously for a long time. So there are some pockets where you're going to be going like, what in the world is going on? But for the majority of the time, you could see the chart for the truth of the chart, for what it is. How do you get there? That's probably the most important concept for me in the methodology. You have to practice. I know this sounds so usual. It's like a usual Wednesday statement. You have to practice. But for those of you who truly have the passion for trading, and I don't mean the gambling passion where you just like, I just want to press, like and see if I'm gonna like hit, this trade or maybe have a loss. No, that's not the passion I'm talking about. I'm talking about the passion when the other, week, one of my coaches comes into me and he says, Roman, I've logged in 10,000 plus hours going through the charts. And he is so good. By the way, he co-teaches with me at Antal WTC2 class. And I'm saying to him, like, Antal, you're so great. Like, why are you talking about this? And he's like, I feel like I need more. I need a much higher level of understanding of seeing the chart. That type of passion I'm talking about. So if you have that, that's what's the most important about the methodology. Because if you have that, you will spend hours and hours and hours going through the chart, asking questions, understanding the concepts, and then Once you do that, that's going to translate into the skill building, and your skill building is going to translate into great trading. That's how it works. That's the most important thing in any methodology: your commitment, your time that you devote to that. And if you don't have that, 95% of the time you're going to fail. Everything else is just gambling. And that's how I see this. And that's how I see this after 30 plus years of experience and 15 plus years of teaching and coaching this material.
I
Wow.
totally agree with you, Roman. And practicing is really important because we have to. I think that one of the most important ability of a trader is to be flexible in the analysis. How do you react with what you see day by day in the market? That's the most important thing. And you can only practice, practice, and practice. There's no other way.
All right. And Yaroslav is saying, the more I know, the more I don't know. And this is a
Exactly.
wonderful place to be in. Like, really, really wonderful place to be in. If you see that you don't know something, you could start covering it. And we always say in training and in classes as well, the answer is not important. Think about this concept. The answer is not important. The question is the most important thing. And this is where you go into the area of like, what is it that I don't know that I don't know? That's the place where you need to go. Okay. Second question, Alessio. Do
Yeah.
you see the Wyckoff method and Elliott wave theory as complementing each other? And if so, how do you combine them in your trading?
Well, I think that the Elliott wave method is good to identify the structure, and it educates you to think in terms of structure. And all the Elliott wave traders that I know are quite good at risk management, and that's an important ability. But I think that the Wyckoff method itself contains this principle, and also it can help you to recognize many, many variations. There are not just five waves, there are so many patterns that we can identify. And that's I think, the most important ability of a trader to recognize many patterns and recognize the variation between one pattern and another, not just one single chart, one single profile of a chart.
hmm And by the way, guys, if you want to have that combination of Wyckoff and Elliott wave, I had an opportunity to work with Jeffrey Kennedy of the International Elliott Wave Company of Robert Proctor. He's an amazing Elliottian. I mean, we always have fun conducting the sessions together. We've conducted a couple of specials, so go to our website under the product line. You could find that. So I agree with Alessio that Elliott Wave also has structural approach to the market, as well as Wyckoff methodology. We look at the structure that the price creates, whether it's an uptrend, trending environment, or a downtrend, or whether it's a trading range. So in a way, they have this similar conceptual approach. Now, this could be a very great synergetic combination if you're into Elliott. So I personally, studied Elliott, at the beginning of my career. It felt that Wyckoff method was a little bit closer to me. It resonated more. So I started concentrated just on Wyckoff and chart reading. But if you have really great skills in Elliott Wave, this could be just, a powerful combination. Next one. Alessio, which trading style, intraday, swing, campaign you like the most? If one day somebody comes and says you need to choose only one, which one would it be and why?
Well, swing trading. I really love swing trading and also campaigning. It really fits my personality, even though I think that as Wyckoff, we have to be able to recognize the patterns on an intraday chart, on a daily chart, on a weekly chart. The structure is always very, very similar. So it's just a matter of preference for me. And I think that young traders has to test all the time frames, and then decide what kind of trading is best for, is the best for him.
Hmm. Yeah, well, my personal preference is has always been swing time frame. And lately, I've been spending for the last 2 years, a lot of my trading has been concentrating on the intraday time frame, and not just because we have a lot of people in training who are intraday traders. So I'm kind of trading their time frame. But swing and campaign like are probably my most favorite time frames because you don't have to make a decision every day. Once you're in the position, you stay in the position. You don't have to like go in and out on the intraday basis. You also enjoy more profitability because of that. You make fewer mistakes, and you stay in your position for better profitability. It also influences you psychologically. So, for instance, I'm still in the gold position that I have opened from 2019 in GLD in the ATF. So that is most definitely a multi-year campaign position for me. By the way, for those of you who are thinking, oh, well, what's going on with gold? Is this a distributional top right here? I would say I'm not seeing it as distributional top because there is not enough evidence yet, either in the volume signature or price action itself. I know that we are in the trading range right now. We could go through the chart, we could analog it, and so on and so forth, but it's still on. And then with this swing time frame, what's beautiful, and I love the trades that last, let's say, like from 2 weeks into, let's say, like a couple of months. And especially when I go and do directional options trading on that. So I'm trying to pick and select something that's going to have a lot of momentum, that's going to be in the expansion phase of the move. And using directional options, that's what gives me so much leverage. And it's just so freakishly sexy to trade like that. So that's my style. That's what I like. I'm a speculator, like, and I believe that majority of the traders have that kind of like gambling bug inside them. You need to know that. You need to know the degree, like the 50 shades of your gambliness, right? So you need to understand where you are on the spectrum and adjust. Um, so I like those type of high leverage momentum type of plays on the swing time frame. Okay, so we finished with these three questions, Alessio. Why don't we give them a little bit of the preview on the Bitcoin? So I know that with your people in the Discord, you've been talking a lot about the cryptos market and Bitcoin in general. So, what is it that you see? Because there is obviously a lot of talk about Bitcoin. Oh, it broke the trend line, like it's going down. There is a question here that I see. Do you think the crypto cycle is over with Bitcoin showing the signs of selling pressure?
Well, I can say that we've been out of this position almost completely. We have very minimal capital allocation to Bitcoin, just 10%. So we are playing defense since October. And from that point of view, I would suggest to treat Bitcoin now as a trading instrument and not as an investment instrument. Absolutely. This is really important because the volatility is quite high. And you can clearly see that distributional structure, local distributional structure at the top. Now, what's the target for the current reaction? I think that we could have some form of bounce in the next few days. And in fact, on Friday, I was suggesting to the Wyckoff crypto Discord community, there is some room to close the shorts if you want. But the point is that I want to see how much demand comes around that 70,000 level. That's the most important level for me.
Which level, Alessio?
70,000 for Bitcoin.
70,000. Yeah,
Yeah.
I would agree. Yeah, this is okay. I need to figure out last time. Okay, here it is, right? Right here.
Yeah,
This
exactly.
is the level. Yeah. So we have the impulse that takes us out. We have exhaustion, which is local here. We have the test of that. We have shortening of the thrust on the next leg up. So it is okay for the price to test this level. I mean, this is the area between, let's say, like 90,000 to about 70,000 that Alessio is targeting, where people are going to be freaking out, right? Because it's going to be a local capitulation by weekends. That's going to happen if the price goes there. It's going to start accelerating because there's going to be a lot of sell orders as stop loss orders being converted into the market orders. But in reality, if you retest here and then the price goes up again, then the uptrend is still intact. So it just a lot of I'm not gonna say that like bad decisions. I mean, it could turn out into like some kind of distribution on the way down. But again, look at the volume signature. What do you see? Is there a lot of volume coming in? Why don't we have the volume like this? Right? Something more serious. Why don't we have the volume like this that produced, let's say, like this formation right here? And we don't have that. So for now, is there selling pressure? Yes, but also I want to ask you, then who asked this question? Adley. Okay, I'm mispronouncing the name probably, so I apologize. Did we have a selling pressure in this area? Oh, yes, we did. And there was the same conversation and the same question at that time. Did we have the selling pressure here? Oh, yes, we have. And it was the same question. Are we done with the Bitcoin? Have we had a selling pressure here? Yes, for sure. And are we having currently a selling pressure? Yes. Now, the background conditions are different in all of those cases, right? So we are most definitely not having the same type of background strength as we have seen before. So here, all of these legs are going into the upper part of the uptrending channel. This is the first time when demand cannot produce that, and that's the huge difference. That's what I would concentrate on. So with that, that tells me like there is some probability that we might not hold here and we might go into that area, the target that Alessio was describing. So it's right here where I want to make my decision. Right now, there is no edge to this trade. You either should be already in a short position or you should be waiting, for some kind of like pocket of the reversal at the specific level.
And also, I would like to add that we have consumed all the potential default by the original accumulation count for Bitcoin of the 2022-2023 cycle. And that is the point where you generally stop and you want to see what's the next report. So it would make a lot of sense to stop here, retest the 60, 70,000 level, and create a new consolidation for the new cycle.
Hmm. By the way, I mean, like to me, there are so many like analogs here that I see like right away off the top of my head. Um, I wish I would have a different way of drawing here. So, for instance, if you look into, let's say, like this area right here, the analog to this is going to be this. Then we have the improvement of selling. Then we have this deterioration by the demand, deterioration by selling that goes into the impulse where demand seemingly improves, right? So I can't even write this. Demand improves, but how does it improve? Without result in both cases. So usually this improvement without the result into potential phase C is going to be having the character of like, oh, it's a great push. Let me get in on this trade. And then at the upthrust action, you're going to have that failure. And you're going to go into a change of behavior in both cases. And that change of behavior is going to start acting better than the dominant force, which is demand in this case. Then what do we have after that? So we have that sign of weakness, change of behavior, being followed by a mediocre attempt to go up. So in both cases, we come to about one half of the decline. And then after that, we go into a more, improvement by selling. Uh, in this case, demand improves right away, right here. Supply starts to check out and it starts to decline. And then off we go into the exhaustion by both forces and into the local climactic action into phase C. Well, here we are most definitely moving still. So there is definitely more weakness. And we said that the background conditions suggest that we're going to have more weakness than this. So at this point of time, like we just have to assume that this is a weaker pattern, a weaker analog, and with that, it might, have lower targets. And I agree with Alessio that, with the Bitcoin, you have to trade it. You have to like trade the swings right now. And then you might potentially also hedge against the Bitcoin.
Yeah, for
All right,
sure.
Alessio, any last thoughts on Bitcoin?
Well, in the short term, I see some demand is trying to come here, but the response, we basically have no lift every time demand comes in. So this is still an area of vulnerability. And also, Roman, I would point to the fact that if you look at the previous area, accumulation area, in the April low, well, between this level, so the ultimate support then in the April low, and now we don't have a lot of like the structure that we see. I don't see many support there. So in case we fail, we could actually accelerate. We could actually accelerate here. So beyond the oversold condition, that's generally the point where you want to be a bit cautious with shorts, and I totally understand that. But what I see here is a lack of support in that area.
Yeah, and I mean, look how it felt last time within the same space. I mean, obviously, it's all related to this impulse right here. This is a meaningful institutional volume signature. So, and they are buying as the price goes down here. So, the key for us is to observe how institutions behave around this place. Is it going to be like shallower, slower, more resistance by demand into the sell-in, or is it going to be more aggressive? So again, if you're not in the position, I'd say like you still have to wait for a better spot. If you are in the position, you're just riding it and enjoying the profits. Okay, off we go away from the Bitcoin. Let's come back to some of the questions that we have here.
Yeah.
Okay. Again, just want to reiterate that like we want you guys to come to our December 15th sessions. Go to our website, sign up. I'm gonna have a lot of stuff. We're gonna have some giveaways, so some free stuff. That's exciting. So why don't you sign up and get some of our free stuff that we can give you. All right, Yaroslav, I think, is also asking about Bitcoin. Just took a great move on Bitcoin based on your intraday techniques. Okay, great, Yaroslav. So much appreciated to you guys. When do you interview for intraday training programs? When does the interviews for the training program start? Yeah, I'm gonna do this after the Thanksgiving. So after the Thanksgiving, we'll send out the invitations for those of you who would like to sign up for our either intraday or swing training program. It's a very, very intense product. So it's kind of like a job. So you come in and you commit full time to that, especially on the intraday. And we give you very, very deep knowledge, and we develop very advanced techniques for you and with you. And the training program has been in existence for 2 years, and oh boy, did we advance with this training program. I mean, the whole ecosystem now is populated with some pieces of knowledge, from this product. I'm very, very proud of what we have done, and people are just like raving about being there. So if you really truly would like to become what I call a professional retail trader, that's the path. That's the path to excellence. But you have to take WTC serious first. Why? Because I don't want to teach you from the basics. And even if you think like I'm not a basic trader, that's fine, but you don't have our knowledge. And even if you think that you do know Wyckoff methodology, we teach it in a different way. We teach it in our way. Every educator out there, and I have a lot of colleagues, in the Wyckoff space, um, have their own adaptation. So you need to kind of get with the program first. Okay, Yaroslav, looking forward to the interview with you. So, and just feel to email me, Raman at wyckoffanalytics.com. Let me know that you want to have the interview. I could most definitely, after Thanksgiving, schedule the interview with you and just spend time with you going through the stuff and so on and so forth. Okay, uh, Alessio, Salman is asking, how do you tell when ESO movement signals a real directional move versus just low volume noise? Wow, what a great question. What do you think?
Yes, we always want to look at the result, not just the volume. So that's really important. When I was mentioning volume, Roman is consider volume in combination with the price action. That's exactly what we want to see on the ease of movement. We want to see a break of a significant resistance or support. And when that is happening on low volume, we have the ease of movement.
hmm Yeah, well, I'm trying to find here some cases, let's say, like of the candy bars. So let's say, like something like this to, let's say, like this volume signature to, let's say, like this volume signature right here, right? So this is the last bar. So we could see how the spread is improving, right? And it's at the level. But look at the background, how selling improved here over this. And look how demand deteriorated here over this. So you have a setup where selling is improving, demand deteriorates, and selling is improving again. And you have that candy. And the most important bar off the top is that first red bar right here. So you go right into the level, not touching it. That's your candy bar. That's your broccoli bar. That's the bar that's going to fake you out. Having said this, this is different. Look in the way of how, let's say, this bar right here is being compared to this big bar right here. So here is the volume and here is the volume. Slightly less volume produces a better bar, but the background is so different. We're seeing how in this area right here, let me clean this up. Yeah, I don't like this drawing tool here in TradingView. This area compared, let's say, like to this swing to the downside. All right. So we see the difference in the way how the stop in action happens. We also see how different the volume signature is. Right. So we are maybe about like 30% down on average on the volume. Spread is down as well. It takes more bars to go down. Let's say like from this top right here, which starts higher than this, 3 bars down here, 1, 2, 3, 4, 5, 6 bars down here. So it takes less volume, less selling, more time to go to the same level. And then the response by the demand is way better on slightly less volume. That's your ease of movement. So it's a very interesting question and a very interesting concept to discuss. And we, consistently have this question in training and in classes. So for those of you who would like to study the difference, yeah, again, sign up. Okay, up to the next question, and please post your questions. We're not gonna be here for a while. We're definitely gonna stop it at some point. Mermidon is saying, I love seeing you guys live stream. Yeah, so thank you so much. We've done this before, like in September. I was doing it. I'm glad that Alessio has joined me. So let's extract more knowledge from Alessio. Okay, let's go to the next question. Um, Lulos is saying, I'm using Elliott wave and combining it with the Wyckoff. Excellent. Keep doing it. Whatever works for you, keep doing that. Myrmidon is saying, been learning from you quietly for years. Thank you so much for everything that you do. You're welcome, and I love doing this, and I know Alessio loves doing this as
Thank you,
well.
Myrmidon.
Okay. Salman is asking, what is the maximum winning rate in stocks for someone who spent 6 years using Wyckoff method and spent 4 hours in charts daily?
Can I say something controversial, man?
Go for it. I
Do
love
not
controversial.
obsess yourself with the winning rate. What really matters is the win to loss ratio. How much money you are making and how much, what is the maximum drawdown of your portfolio. That's the real important thing. By the way, if you want to improve your winning rate, we have a great free instrument, which is the bias game. And I think that's really important when you want to understand the nuance between distribution and accumulation. But I think that the win to loss ratio is way more important than the winning ratio, man. What's your take about this?
Yeah, I would agree with that. I mean, like you have to create the systems that are profitable and consistent and robust, right? So with that, I've met traders throughout my whole career that had a 10% winning rate, but when they would go into their campaign mode and their R&R would be like astronomical, something between 30 to 100. Think about this. R&R, reward to risk, uh, between 30 to 1 or 100 to 1. How would they do this? Well, because they enter the position at such a low risk place, somewhere in the long-term campaign accumulation range, based on like the intraday. And then they switch it to, let's say, like throughout the whole campaign to the monthly stop loss movement. So you could imagine the win rate that they would have. They don't have to have like 50%. But for regular trading, like I observe, like, and I, over the last, 2 years, I went and analyzed over 20,000 trades from our students and our trainees. So I've seen probably everything that could possibly be done, uh, all possible failures, all possible winnings. Like we've analyzed it, and like you could be profitable and consistent at 40% win to loss. You could be profitable at 50, 60. Our preference is to be on the student level, like of taking WTC 1 and 2 at 65%. Once you go into training, we want you to be above 75 to about 85% on your win to loss ratio. Now, that comes with pain and suffering, meaning that you really have to sweat it out. You have to spend a lot of time looking at the chart, looking at the concepts that we give you and practice. Because knowledge is not a skill, as I usually say. And you guys heard this from me many, many times. I usually do not want to work with people who do not practice and who just hoard the knowledge. It's just not interesting to me. So, with that, I mean, coming back to the question, 6 years, 4 hours, you should be at the advanced level at this point. So, meaning that you should be trading and being profitable and being consistent. And you should have a developed system, meaning that you have your playbook setups. And when you look at the market, there is clarity. There is no fog that you have looking at the chart. So if someone looks at the chart and they say, well, I don't understand what's going on, it's a fog, right? So the person does not see the chart for what it is. But an advanced trader would come and right away, the advanced trader would see the structure, would see the character, would see the construct of the swing, would see the specific important levels, and so on and so forth. So that's a professional. So you should be, after 6 years and 4 hours, at that level. If you're not, then maybe that path was not having enough quality and you probably need some kind of boost, like maybe like look at this, look at that, okay, this and that. So it's a path, and I definitely sympathize someone like with the trading path, and I have a lot of respect for people who select this path, us, because it's a very, very difficult craft. Every day you trade is kind of like going to the Olympics and performing at the very highest level. All right. Tony Torres, do you consider all green candles a sell and all red candles a buy? If so, why? If not, why not? Alessia, what do you think?
But that would be too simplistic, Tony. In fact, we use very often our entries are buys on green candles. Sometimes, once we get some kind of confirmation, it means that we have broken the structure of a downtrend, for example, and we see some green candles that are breaking that downtrend. So it's way more complex than that. And if you want, Roman, we can find an example there on the chart.
I'm sorry, which example are you looking for?
I'm just looking at this downtrend here, and for
Hmm.
example, we were looking for a short-term trade to the upside, right in that oversold condition. So for prior to that, Roman,
Yeah.
basically on the previous 2 Fridays, we were looking for small buys. And the point is that sometimes you can be contrarian. Sometimes you need to wait for a confirmation at least one day of a green day to buy. So you don't have necessarily to be so contrarian and buy when you have that weakness. You can just wait for a confirmation.
Yeah. I mean, there are absolutely both ways that you could see the signals, right? So my personal preference lately is a lot of like compression at the level because that creates the lowest risk profile for my trades. And those bars could be up and could be down. So it doesn't really matter. But they are conceptually reflecting the exhaustion of one force or another. So after that, usually comes the bias bar, usually an ISO movement. Why? Because when both forces are exhausted and the bias takes place, your first bar is usually going to be, you could call it an ISO movement, but in reality, it moves easier because both forces are exhausted and one is dominant over another. And you could see here, so for instance, like this bar right here, this bar right here, this bar right here, they have that element of like the ease. At the same time, I do love the bars that come prior to that because those again are creating, that risk profile. You could see them everywhere. Like, and they, again, the pattern is kind of the same, but you also could use this, right? So aggression, where you might be thinking either a selling into the level when, let's say, like the opposing force is coming in and it starts, like to produce some kind of result even in the up bar, or on the next bar that shows that aggression, that supply is actually overtaking demand. So there is a entry there as well. And in some instances, I would use just like a very simple stop order, just as a confirmation. It just the market pulls me in. Yeah. Okay. Interesting question, Tony, and just gives me an understanding of your level. So thank you. Okay. Let me see. What's our next question?
So there's a comment here I would say we're missing on
Mhm.
euphoria and greed for a proper distribution. Well, I think this is a question for Bruce Roman. Why? Because if you when you study the history of the market during inflationary cycle, we generally do not have a lot of greed at the top because retail has less money. That's the truth, and so the participation of retail is generally less pronounced rather than non-inflationary cycle. So I think that really we have to pay attention to this structure, to peculiar to this peculiar juncture of the market, Roman.
Okay. Next question from Bamboo. Okay. Do you factor in the end of the quarter? Yes. Repo injections, specifically, no. Um, SOFR above 4, no. Bond accumulation by big players. We do look at bonds. Rising unemployment. We do talk about the unemployment and potential rate cut in December. We do talk about the Fed. Now, where do we do this? There is a specific space where we do that. All of that, the macro elements of trading, investing, we discuss in the Wyckoff market discussion together with Bruce Fraser, who is just an amazing veteran of the market. He's been doing this since 1982. This man is a legend and he has so much knowledge for us. Every Wednesday at 3 p.m. Pacific, me and him, and sometimes Alyssa joins us, get on the call and we go through all of those big things that you are asking about, and we factor in the technical analysis and chart reading into our discussions. It's a amazing, highly packed hour and a half with Bruce. And again, you have to listen to him because the man knows his stuff. Okay. Jay Pacheco's is saying price structure is more important than the volume. What is the structure telling me? All right. Yeah, sure. Okay. Abrar has a question. Thanks for the great content, first of all. The question is, do you check PNF charts as traditional Wyckoff traders used to do? If yes, can you explain the idea of it? Alessio, I think this is the question for you.
Well, we absolutely love point and figure charts, and we have also created a specific platform for point and figure charts created in the Wyckoff way on our website. And the idea of the point and figure chart is that you can count the potential to the upside or to the downside of a distribution or accumulation. So they're really powerful, and they work very well for crypto as well. So absolutely.
And again, please check out Alessio has a special on the PNF and cryptos. Bruce and I have a complete PNF course. It's about, like Alessio, I forgot what, 30, 40 hours of material, something
Yeah,
like that.
it's a lot of hours.
Yeah. So like Bruce is an amazing, he is number one in the world for the horizontal PNF count. And see, I'm not saying PNF. I'm saying something very specific in that subfield of knowledge, PNF, right? Because you could go to a lot of people like Dorsey, right? Um, and please check out his work as well. But Bruce has an amazing techniques and and he has developed a lot of proprietary stuff that he shows us in WMD or in his blogs. So check out his work. And by the way, you could trade off the PNA. I love the one of my favorite techniques in the PNA has nothing to do with targets, but has to do with tape reading, how you read the chart. You could combine the PNF and the volume. That's probably my favorite thing to do with the PNF. And then the chart has becomes clear. You know, it just opens up to you. Okay, great questions today. I love it. Okay, someone comes back and tortures us with the same question. I agree with you guys on the risk to reward, but still curious to how can someone, curious to know what can someone winning rate reach, I guess after 6 years. So again, it depends on the person, but my preference after 6 years and a lot of work, if you put it in, if you're saying like 4 hours a day, you should be between like 75 to 85% winning rate on average. You might be better, you might be slightly lower, but close to that. So that would be like, as a coach, I would like to see that.
Roman is very strict. I think that 75% is okay.
Okay, yes, for sure. 65 too, and 50 is okay, and 40 is okay, and
Yeah.
30 is okay. If you create the profile, risk reward profile in such way that you're profitable and consistent and the system is robust. Okay, great. Scott is saying, please describe what practice looks like. Alessio, how do you practice?
Well, we have to go through a lot of simulations, and you can do this on TradingView and just using the replay function, or you can just attend WTC Part 2. And that's a great way to practice with Roman and Antal. And Roman, I think that's a fantastic product, by the way. And I'm a big fan of Antal. He's a great reader. And there are so many great chart reader in the company now, and I'm really proud of that. So there are many opportunities to practice. You can practice on your own with simulations, historical simulations, or you can practice in class, which I think is more effective.
Yeah, would agree with that. So personally, I have multiple practice techniques, and we've developed, over 7 different styles of simulation that we do in training and in classes. I mean, we conduct those on a daily basis. Like yesterday, throughout all of the classes and training modules, I've conducted 3 trainings, 3 simulations, with people, and that gives you kind of like an idea of how serious we take this and how much we spend of our time working with our students and trainees and ourselves. For me personally, I really like not the simulation bar by bar, which is a little bit like, I'm coming to a realization that sometimes people over simulate. Sometimes you guys spend so much time on the simulation, but there is no conscious thought about in that process. Think about this. I'm going to give you a perspective here. If you are working on some concepts that is a blind spot and you're doing bar by bar, it is less likely that you will see it in that type of the simulation. But if you're going to do the R&D historical simulation, that's what I love. I love to ask the question and find the answer on the chart. That produces a much more significant advancement in your knowledge and in your skill than a bar by bar. So sometimes people come to me and they say, like, I've been simulating for 8 to 10 hours per day for the last 8 to 10 years. Okay, well, then you have to be really good, right? And still, there are some problems. Why? Because you don't simulate what you don't know. You only simulate what you know. So, in a way, your knowledge does not expand. So, how about that for a concept? Okay, let's go to Kevin. Do you get into the higher highs, higher lows, and lower highs, lower lows method in your training? Yeah, absolutely, Kevin. Like it's a basic definition from technical analysis of the uptrend, right? Higher highs, higher lows, downtrend, lower highs, lower lows. So we want you to see that, but that's probably kind of like basic knowledge, right? So a lot of people that come to us, they already have this understanding. And if you don't, you could take our basic charting course, go through that. And yeah, we would absolutely kind of like see this on the local structure, on the global structure, and so on and so forth. Okay, some comments on the Bitcoin. Salman is saying that's awesome. Correct. I passed level 1 and 2 with Euramon and my winning rate around 65%. Great. Yeah, 65% is a kind of like a really, really stable like rate of winning that you could have, and you could make a lot of money and create a lot of consistency. We'll register in with you with your other courses to elevate that even more while focusing on risk reward. Absolutely, Sam. I'm looking forward to working with you. Just shoot me an email and sign up. There is an opportunity to sign up right now. We do the monthly payments for our courses with no interest. The earlier you start those payments, the more spread out they are, and the lower the monthly payment is. So take advantage of that. Bill is saying, love your stuff, guys. Big fan. We're big fans of the people who love us too. So we love you back. All right. Should we try to get Bruce on the future stream? Absolutely. I
Absolutely.
keep asking him, and he's just, has his own stuff going on. So, with the man, I usually tell him what I would like him to do, and then if he joins us, he joins us. If he doesn't, but it would be fantastic if Bruce could come here to the live stream and just, like be with you guys, answer your questions. Because again, like with Hank, I remember Hank passed away in 2017. And one of the regrets that I hear from people that come back to me after his passing, and they say, listen, I wish I would have taken a class with Hank. And I always would tell students, like in at Golden Gate University, because I was, a professor there, and together with Hank and with Bruce, I always would tell them, at least take one class with Hank, because he is that good, he is that entertaining, he is that conceptual, he is that like knowledgeable. You have to experience that. Bruce is in the same category. You need to experience his presence and his knowledge of this vast material. So we'll try to get Bruce on the live stream, but it's pretty hard for me to do. Okay. Snowpack is saying, is this correct? PNF from last point of supply to the upthrust after distribution target 89 about, Alessio.
No, we actually have a lower target. So I had the short-term target that has been fulfilled, but was like just a 5-minute chart. But considering the last trading range, I think that there's still lower to go.
Hmm. Okay, yeah. And I mean, we tried to stop yesterday. Yesterday was the bar that we were discussing. It definitely behaves better, right? So demand is coming in. This is the highest demand, like in this formation on an up bar, right? Not like a hidden demand like here or here or here or here. But I was comparing it to this bar, and because the volume signature is somewhat close. And every time we have that spike, right, in volume, we have some kind of not continuation, I'm sorry, counter reaction, counter reaction, counter reaction. Here, we have very limited response. So that told us that we're going to go lower. That was the call on that particular up bar. Then this bar right here, there is an expectation at the end of the bar that we could have some continuation to the upside, but there is none. So with that, obviously the volume signature is already high for the day. That's going to be another kind of like high volume bar today by the 5 p.m. Pacific. And, it's still weak. It's still weak. Okay. A couple of more, and we're going to stop here. Can you show your trading routine? Interesting question, Alessio. What is your trading routine?
Well, generally, you have to go through many charts and trading routine. It means basically that you have to be ready for look for setups on the swing time frame on the overnight session. That's what I do, and then I'm ready to execute my position on the next day. That's my favorite style of trading, and that's like my primary trading routine. I want to be ready. I want to have a plan for the next day.
Hmm. Okay. Well, we talk a lot in our ecosystem about the trading routine. I would say you're going to have your trading routine as a trader where if you truly approach this as a professional, you know what you're going to do in the morning before the market opens. You know how physically, mentally you're going to prepare yourself for the day. You know how technically you're going to prepare yourself for the day. You know how you're going to keep your records for all of the trades and do the post analysis of them and do the adjustments into the next day, into the next week. So that's a big part of our conversation. Again, you could go to our website and check out the product like Trust the Process Special, where we talk about the trading routines. The second element of the routine for me is always having the playbook, having the setups that are back tested, in the setups that you have high confidence, and like trading those. That's also a part of my trading routine. So a lot of elements there, and like you kind of have to develop this. If you don't have a trading routine, you're gambling. You're basically pushing buttons, buy, sell, and then sometimes you will be right, sometimes you will be wrong. If you don't analyze your behaviors in the market, you're going to fail long term. You might have some pockets of success here and there, but that only emotionally going to keep you in the game. And again, to me, that's gambling, and I'm not in the gambling business. Alessio and I, we are in the business of making highly educated bets on the market.
Absolutely.
That's what we're looking for.
Totally agree.
Special spots where risk is lower, reward is higher, and we have the higher probabilities behind us based on our knowledge and backtesting and skill development. Oh, Alessio, here is an interesting question for you. If Bitcoin goes to 70,000, then what's going to happen with altcoins?
Well, I totally see another 30% down for many altcoins. And but just remember that many altcoins are really in a bear market. So it's totally fine. Just another 30% discount, and then you want to be opportunistic at the very lows. But before that, we have to wait.
All right. There you have it. Kevin is asking, why is there only a 12-month access to the course? So this is very me specific. I do not believe in live access. I usually see that if we were to give live access to people, people will not study. So I want to put the pressure on you to actually get the material and actually study it, right? So and then I also know that I cannot give you the live access because if I, let's say, close the company tomorrow, then what? What's going to happen? I still need to provide you the live access. Yeah, I'm not going to do that. I want to have the flexibility and I want to push you, motivate you, you know, get you into the sweat of the material and just like practice, practice, practice with you. So that's why we have that. But really good question, Kevin. And Kevin, join us. I sense that you want to be there. So and I want to help you out. So with that, Sam is saying Raman is a legendary trader. Well, thank you, an incredible instructor. Thank you again. I'm in currently in WTC1 as a student. Have absolutely enjoyed every class and learned a lot. My trading has improved immensely. Thank you. Well, Sam, glad that you are in the class. Number one, really happy you're enjoying the material, and most definitely excited that you are converting the knowledge into the actual result, which is making money consistently. So thank you for your comment. Okay, thank you for great knowledge. You're welcome, guys. Luca is asking, and we're probably gonna stop here, Alessio. We're close to 9 o'clock Pacific. Luca is asking, would you connect those two distribution structures into a big distributional structure with a very big causality? Alessio, what do you think?
There's a trick when you count structure and point and figure charts. You always want to be very conservative and focus just on the last segment, especially if you are counting distribution. So it makes doesn't make sense to count a huge structure to the downside. This works for stocks and works for crypto as well. So we just focus on this last segment. That's it.
Okay. John asks, okay, strategy for the next major crisis. Okay, I could see that, John. All right. Tube Movies is asking, if someone doesn't have money for WTC course, how can someone also learn? Okay, I gotta be honest with you guys. I've been coaching a lot of traders. When someone, and I don't want to offend anybody, so Tube Movies, please take this not personally, but take this as kind of like experience coming from a man who has been around a lot of traders. If you don't have the money to pay for the course, you shouldn't be trading. That's the bottom line. Because what I've realized when people come to us and they have that mentality that I want only everything free, give me everything free, or I cannot pay for your course. And I know that some situations are really difficult. Okay. But if you are in a difficult situation, financial, you shouldn't be trading. You should be concentrating on the stability of your income for yourself and your family first. Then trading comes. So if you have the money and you just don't want to pay for the course, again, all of these problems, either you don't have the money, you want everything for free, or you have the money and you don't want to pay for the course, are going to create psychological resistance for you to create abundance from trading. You already predisposing your mind to fail. So I usually kind of don't want to work with people who have this type of, mentality, because I know that eventually they will get the knowledge, they will develop the skill, but they will fail in trading just in general. So please be careful when something like this comes out of your mouth. Think about the ramifications, psychological, mental ramifications of a statement like that. Because every word, every statement is vibrational. Your vibration creates the future path for you in trading. So you're already limiting yourself on receiving the money from trading. So I don't know if this lands well, if this is understood, but again, I don't want to be really personal here, but this is a very, very important concept to me personally when I work with people. Like I always assess people as to how successful they could be in trading in general. So with that, like that's just my honest take on this. So again, just be very, very careful. All right, last question from Kevin, and we're gonna stop here. I haven't invested in a lot of training, but retail trading is lonely. Do students work with accountability partners? Well, Alessio, I mean, like you have the Discord, you have a lot of people there. You guys communicate. On my side, I must say that all of our classes have what we call learning pods. So what are those? This is students getting together. We group them into smaller groups and they go through the material together, they simulate together, and that's what creates accountability. You go to a higher level, Kevin, like our training, then accountability rises exponentially. There, you're not only accountable to yourself and to your own family ecosystem, but you're accountable to us, coaches, and also to the trainees because all of your trades are being discussed in the open of this training environment so everybody sees what you're doing. And that's ultimately like what I want to have. I am strict, yes, but only because if you're not strict in terms of how people get the knowledge and build the skill, then it's just a waste of life. It's a waste of your life, it's a waste of my life. If you come to me, I want to train you to produce the result. I don't want you to train you just for you to feel good about yourself, to get the knowledge and kind of like, dissipate into nothingness. No. I want people who are passionate. I want people who have full time, devoted to this craft if they want to become professional retail traders. I want sweat and blood from you as you go through millions of charts and you understand, specific concepts that we teach, that we train, and only this type of people, have my respect. Everything else is kind of like, okay, yeah, you could sign up. I will train you, but I'm not going to commit to you emotionally to your success if you don't show me that you have the same type of passion and the same type of determination, reluctance to give up. When you fall in trading, you stand up and you start climbing the mountain again. That's the people that I love to work with. All
Wise
right,
words,
great.
wise
Yeah,
words,
Alessa.
wise words, Roman, and this is a really important thing about trading. I think this is probably the most important concept of trading. So
Yeah, yeah, it's all in you. It's all in the commitment to your craft. You commit, I'm going to be there for you 120%. You don't commit, I will be there for you as well, but not to the same capacity. Alessio, with that, it's been an hour and 5 minutes. I think we're done. I mean, like, it's been
Yeah.
a great session. So great, like to have a session with you. Thank you guys so much. Owen, thank you so much for putting this together. Don't forget about the December 15th. Rambo is saying enrolled in WTC1 for spring, reading Hank's books now, working on bias games daily. Looking forward to working with you guys. Appreciate the content. Absolutely. That's the mindset. That's the mindset. You are mine. It's brilliant. Thank you, Myrmidon. Okay, great. Okay, guys, we'll see you on December 15th or in future live streams. I'll talk to Bruce. Maybe we could, try to persuade him to do the live stream. And we'll see you in the classes and in the Discord. Thank you, guys. Thank you, Alessio.
Thank you, Roman. Thank you, everyone.